Hey everyone, I'm so excited to bring you this video where I'll be talking about the perfect suburb. So I'll be sharing with you one suburb in Australia right now where we invested in 2016, where you can invest in right now, get both positive cash flow or at least a property that doesn't cost anything to hold, and also still get tremendous growth. And I'll tell you the reasons why we invested there. So if you're looking for an incredible suburb, someone to just break it down, watch right through till the end. My name's PK and I help people build passive income by buying properties using data without needing to drop and take gamble on a $15,000 buyer's agent. All right, let's get into it. So this suburb, it's in Tasmania. I just want to first of all dispel some myths, okay? So in 2016, so like between 2011 and 2016, I'm reading here from my notes for a second, the population that was in this suburb actually dropped. Okay, so in 2011, the population of this area was 2,704 people. And then you fast forward to 2016, which is when we started investing here, the population was 2,687. Okay, so it was like a, I don't know, 40-person drop, which is kind of remarkable because in 5 years' time, you would expect the population to increase in a suburb worth investing in. Okay, but why did we invest here anyway? Okay, that's the first thing. The second thing is this suburb is not close to a city center. It's not close to the CBD. Second myth busted. You don't need to buy close to the CBD or as close to the CBD as your money allows to be performing or to be investing in high performance suburbs. And C, or the third thing, the third myth I want to bust in this revelation is that this suburb was predominantly comprising of tradespeople. It wasn't like a suburb where you all of a sudden started to see Audis, where all of a sudden the majority of the population were white collar professionals. No, it was majority were tradespeople, okay? But the proportion of professionals was slowly increasing. Now I'm going to share my screen and I'm going to take us through exactly where we invested and tell you some rationale or paint a picture. Look, ultimately, a picture tells 1,000 words, but a formula tells 1,000 pictures. That's what I believe anyway. So let's get into it, and I'll share my screen right now. Okay, so basically, this suburb, you can see here, this is on the house. I don't know if you can see it. You can go to this website yourself. By the way, this suburb is Berrydale. Okay, it's in Tassie. So if I go to the map right here, if I go to the satellite view, so give you guys some context, this is Tasmania, our friends down the bottom, and on the southeast side of Tassie you have Hobart, and then kind of northwest of Hobart, you have this area called Berrydale. And incidentally, this is where the Mona is, the museum over here, which is, incredibly popular. So this suburb, if I go to the terrain view or the satellite view, it's kind of flanked here by the river, can't build out anymore. On the left-hand side, it's flanked by the conservation area, can't build out anymore, or this forested area which is protected. And you can see that all this area is very hilly, can't really build it out. And then you've got some farmlands over here, but the council are never going to allow those areas to be built out. We did our due diligence, or my clients did our due diligence. More than 20 of my clients have bought in this suburb between 2016 to 2017. You can buy in here right now if you wanted to. You can see that it's kind of a weirdly shaped suburb, so you got some land, but it's not zoned for development. And otherwise it's kind of small. Nothing too remarkable, kind of a tennis club, not too many houses actually. But what we really liked as well was that the surrounding suburbs like Chigwell had been one of the best performing. Rosetta had been, incredibly strong in the data. So when you're looking for a suburb, don't just try to find a hero suburb that's alienated. Try to find a suburb where things like days on market, in which in this case was, coming down very steeply in 2016, stock on market, building approvals, all these things are solid, not just for your suburb, but for surrounding suburbs as well. So I want to demonstrate why this is the perfect suburb. So let's start at median value. So if I look here at the 10-year view, you can go to this website yourself if you want, for Berrydale, you can see that this graph starts in 2012, ends where we are at the moment, 2021. So we started investing in here. So you could see that, when we started investing here, there had already been some green shoots. Okay, the prices were already growing. That's what we want to see. We want to see the data coming into effect, 30 to 35 data points coming into effect. We prioritize the data points as opposed to proximity to the CBD. I mean, in Hobart terms, this is ages away from the CBD. In reality, it's only 10 kilometers, but for Hobart standards, like, this is as far out as you can basically get. You can see this is Hobart proper. This is as far out as you can get. So if you'd asked a local person in Hobart, they'd be like, yeah, Berrydale's kind of like in Whoop Whoop, or kind of far away from the city centre, right? But that did not matter. The proportion of professionals was increasing. The data was lining up. The vacancy rate was basically, like 0.5% when we started investing. Now it's basically zero. It's 0.07%. But this is an ideal suburb. You can see it went from about 250 when we started investing, and has gone all the way up to $500,000. So anyone who says that property doesn't double, this thing has doubled in like 5 years, this is a perfect suburb. Now, I want to look at hindsight, or I want you to look at this retrospectively to understand a couple of things. Now, when we started investing in 2016, someone might have said, hey, why are you investing in a suburb that hasn't grown for the last 4 years? Shouldn't we be investing in suburbs that are growing, that have demonstrably been growing consistently year on year? And you can see that this suburb hadn't. In fact, Tassie had been very weak for like more than 10 years. It was a big gamble if you were uneducated to say, I'm going to invest in Tasmania, much less this suburb so far away from the city. But this is the thing I want you to really understand. Past growth does not dictate future growth. If past growth is weak, or even if there's declines, that does not predict poor growth in the future or good growth in the future. Similarly, if you have just because it's been growing like this, that doesn't mean it will continue to grow like this, okay? The past does not predict the future. It's the regressions or the relationship between the underlying data and its relationship with growth that dictates. It's a regression methodology. After you watch this video, look up regression analysis on Wikipedia, understand how things like multivariate regressions work. Do that, if you want 100K passive income, if you want to make millions of dollars of equity, do yourself a favor and just take half an hour to Google multivariate regression analysis. That is the technique that we use to find these types of suburbs. But now let's look at the rent. I really want to look at the rent as well, because we don't just want to buy in a suburb that is going to experience capital growth, but we also want to experience rental growth. And why? The reason is because when we experience capital growth, we want to be able to take equity. Like in this case, you could have taken about $250,000 of equity in a few years to buy 2 or 3 more assets. We want to take that equity, but when we refinance, we then see that our positive cash flow suburb or properties become negative, because equity just means additional loan. It's not free money. But when you have a suburb like Berrydale, which, we started investing around here, 2016, and that rentals have gone up from, $320 to about $450. So they've not kept pace with capital growth, but they've gone up, well over $100 per week. What that means is that even if we experience capital growth, like it went up $100,000 by 2019, and we refinanced $70K out for another deposit, because rents have gone up, it remains a positive cash flow suburb or property. Does that make sense? So if I just go back here, median value, okay, you buy here at 244, and you refinance at 337, let's say you take 70K out, that's $70,000 of more debt. And if you haven't been getting more rent, then all of a sudden that positive cash flow suburb has become negative, or positive cash flow properties become neutral. But in this case, what's really good, what I really like to see, is that rents have gone up. So we've been able to refinance the clients. I think 20, 30 clients have bought here in 2016, 17. They've been able to refinance twice, maybe around here, I don't know exactly. And that way they've retained their positive cash flow stature because rents have gone up. Okay, it's just really important for you to understand that. Not to be confused with yield. Okay, yields have gone down. So you can see when we invested here 2016, yields have come down. Now yield, if you don't know, yield is just your annual rent. So maybe if you're getting $400 a week, 400 times 52 equals whatever, let's say 20,000. Yields is just 20,000 divided by the purchase price of the property. So generally we want above 4.5 or 5% yield to be positive cash flow territory. And this was very much positive cash flow territory. I mean, check it out. It was near 7%. So anyone who's in the past, or anyone right now, or anyone in the future that says that you need to sacrifice positive cash flow for capital growth, I just want to demonstrate to them right now, right here, this suburb. Because there are dozens of suburbs like this, there always has been, where you don't need to make that trade-off. You can see right here, this was 7% yield, and yes, it's come down. Now that's not because rents have come down. You can see rents have gone up. The yield has come down because rents haven't kept pace with capital growth, like I just demonstrated before. But even if you buy here right now, guys, and this is the kind of, like, I don't just want you to care how much I know about property. I genuinely want you guys to get benefits from property investment, regardless of whether you use my services or not. You can genuinely buy a property here right now for under $500,000, and you will get a positive cash flow property. Look at it. I mean, it's 5.5% yield. Interest rates at 2.5%. This is going to net you, $2,000, $3,000, $4,000, $5,000 positive cash flow right now. Yes, you've missed out on the lion's share of the growth, but the data looks tremendous. The data looks really good. And I just want to come back and bust those myths again. Far away from the city, for you guys in Sydney or Melbourne, you might be thinking, who would have ever thought to buy in this kind of small town place like Tassie or Hobart if we can be buying in Schofields, or if we can be buying in Tarneit or whatever. I mean, this is just high performance property investing, right? Population decreased. Everyone says, oh, buy where population is increasing. It's just bogus. This area has experienced a decrease in population, but the nature of the people that have stayed or moved in. So a lot of people went out, a lot of other people came in. The nature or the incomes of the people that came in increased. Okay, it's who lives there that's more important than how many people live there. Okay, it's who lives there that is more important than how many people live there. Okay, I'll stop. I'll stop sharing my screen now. But just to come back to the, like, right now the vacancy rate is like 0.07%. When we started investing in Berrydale, guys, the vacancy rate was like 0.5. It was trending down. It was beautiful. And this is just, once again, you might be thinking, if you're in Sydney, Melbourne, all the jobs are created in Sydney, Melbourne. If I invest in these far out places, am I going to get a tenant? Like, once again, proof. It is still going red hot. Infrastructure is still going through the roof in Tassie, all around Tassie. We've mostly stopped buying there now in terms of my clients because it's gone up too much. We want to buy at the bottom of the market, as I demonstrated. But if you're thinking, I just want to buy something that's going to give me positive cash flow, it's going to give me growth in the short term, this is your suburb. Like, I don't know how many people are producing content like this, but this is a reality. So the key takeaways from this video, guys: look outside your backyard. Don't focus on population growth. Don't focus on how close it is to the CBD. Buy at the bottom of the market. Make sure you buy in a suburb where growth is there, but also rents are increasing because that's what you'll need to draw equity and build a portfolio. And also make sure you buy in a suburb where it's either landlocked or there's scarcity of supply. All these, house and land builders or these marketing companies, property investment companies saying that you need to buy brand new stock with depreciation to get positive cash flow. Throw it out the window. I did a video on how that's bogus. This is high performance property investing. Another myth, the key takeaway, you don't need $500,000 to spend. We bought these for around $250,000. I mean, there's just so many lessons in this video, right? So jot them down, use it to advance your property investing. Guys, if this video brought you value, hit the subscribe button, turn the notification bell on, hit the thumbs up button. That way it goes to more and more people. The perfect suburb. Guys, try to do this yourself. Property investing is not rocket science. Unlike what all the property investment companies and buyer's agents would have you believe, you can do this yourself. And if you decide that you don't have enough knowledge, continue watching my videos on YouTube. And if you want to take it a step up and you want to learn, regressions and all these types of things, I'll leave a link below to the Property Investment Accelerator. But guys, don't just do my course. Don't just hop on that. Follow me for a while. See if you vibe with me. It's very important to build trust. My name's PK, and I wish you all the very best. Remember, the most important real estate is between your two ears. Catch you later, guys. Bye.